Hello, this is Jordan. This video is being recorded on the morning of Wednesday, January 11th, 2023. Thank you so much for joining me today. In this video, just going to take a quick look at GDXJ, a couple of charts here, and one chart is a bull analog chart. Subscribers have already seen this for the past couple weeks. This is the first time I'm showing it publicly. I'm pretty proud of it, so let's get into that in the video. Okay, so here's the bull analog chart. And we're looking at moves in GDXJ coming off of various bottoms, coming off the 2005 bottom, 2008 bottom, then we have the 2016, 2018, 2020, and the most recent bottom. And GDXJ, I think if you look at that chart on any charting platform, it only goes back to the summer of 2009. GDXJ is based on some index called the MVIS, Junior Gold Miners Index. And anyway, on that website, you can see a chart going back to 2004. So I was able to obtain that data. Very happy about that. And we can see here the current rebound is in black. And GDXJ coming off the bottom, it's already, I believe, a 50% move, and that's using closing prices. So that's a strong move so far. And we can see that the two at the bottom that weren't as strong, those were the 2005 and the 2018 runs, which started off, obviously not as strong as the others. And then the three that were really strong, you have the rebounds coming off of 2008, 2016, and 2020. So my thinking couple months ago was that this was going to be more like the 05 and 2018 bottoms, and it has been. However, it's kind of nice right now. It's nicely in between the three that were huge moves and then those other two. So I like to see it that way. I don't think this was going to be one of those really strong ones. I mean, unless the market broke down 3 or 4 months ago and kind of crashed into a bottom. So that didn't happen, not the case. What's interesting is if we look at 2005 and then the 2008, the late 2008 bottom, we can see that after the first 12 months, that 05 bottom was up, over 150%. And then obviously coming off the 2008 low, that was just such a juggernaut of a move. But the thing about the 05 move is gold had that huge breakout in 2005. That was really significant. So if you tell me that gold is going to break out this year, folks, if gold, the next breakout, like let's just presume a breaking out of 2070, 2100, 2050, whatever you want to call it, this is the biggest breakout in the sector in 50 years, since the early 70s when they let gold go off the gold standard. So that's one reason why I'm getting really excited. Now, obviously, the market could correct. It's coming up close to 1900. So we're probably going to see a correction. But circling back, that's my point. If you're telling me sometime in the next, so we're looking at in the next 8 or 9 months or so, the rest of this chart, if gold makes that huge breakout, you could see the black line there follow the blue line in that move that happened 2005 into 2006. So, that's not an unreasonable comparison. And the other really interesting thing is, looking at all these moves, we can't really produce a multi-year analog because if we're, dating back to, I can produce one of those charts. 2005 into, the middle of 2007. So that'd be like a 2-year move. But that big move really started in late 2000, early 2001. Then 2008, October 2008. But juniors really, even though that the junior move didn't peak, I think, until the middle of 2011. That was really only a 2-year move because juniors and most stocks really made the vast majority of their gains by late 2010 or very early 2011. So I guess what I'm getting at is gold stocks have not had more than like a 2.5 year, 2.25 year move really you have to go back even before 2005. So we could be setting up for something that we haven't seen in almost 20 years. But, enough of me babbling. Getting back to the chart, you can see it here. And so far, this move has basically been in between, the three really strong ones and then the two there at the bottom. But again, 2005 to 2007, or in this case, middle of '05 to middle of '06, gold had that huge breakout above, or low 400s to get above 500, eventually reaching 730 for a big correction. So that blue line there, not a huge stretch that the black line could follow that. Presuming, again, this is the key, presuming gold is going to take out that all-time high at 2050. And if it does, again, that would be the biggest breakout in gold in the last 50 years. I mean, you can't dispute that. Extremely significant. Now, here's GDXJ, the weekly chart, coming off the bottom. There's nothing here that's really, what's the word I'm looking for? Nothing that's super exciting about this analysis. What's exciting is that major bottom is in my opinion, and the miners are working their way higher. This is a weekly chart. Now, looking at the daily chart, I have had a measured upside target of 42. So GDXJ this week has almost nearly touched 40 this week. So, and if we're looking at gold, I think gold, I didn't check it this morning, but it's up. At least prior, it was, in the 1880s. So we're setting up for a potential, 1900 peak and 42 on GDXJ. Starting to see a little distribution. So, this short-term rebound, it could reverse course if we get up to 42. And so looking at the key levels here, we can see, 37 was a significant level on the weekly chart. Look at those three lows, the three red arrows pointing up, at the end of September 21, January 22, May 22. That was a significant level for this market. And so we can see if you look at gold reach that basically at the end of November 22 and 1, 2, 3, 4. So it traded below it for 5 weeks until it broke through last week. So 37 is a significant level, as you can see there. 35 on the weekly is also, that's important support. So GDXJ has broken above that. And now look at there, you can see 41, 42 of the other red arrows. That's going to be a significant resistance area. Thus, that coincides with just looking at the daily chart and looking at what the measured upside target from the breakout would be, again, which is 42. So a lot of things pointing to 42 in this case. There's also an open gap there at 45. If you look at last April, you can see that. So if this move carries, that's also a potential target. And also if we're looking at almost a 15-year chart, you can see that 47, 48 for GDXJ. That's a really significant resistance area. So those are the key levels to look at going forward. 42, bit of a gap there of 45, then 47, 48, really significant resistance. And then what about support? Obviously everybody's talking about, well, there's got to be a correction. I'm waiting for a correction. When you're coming off a bottom and you have these moves, it's a whole nother video, but you really don't see that big of corrections. But what we could see here is GDXJ reaches 42, then it comes back, and the levels you want to be a buyer again are 36, 37-ish, maybe even 45. So to me, that's, or 35. To me, that's the most you could see. If GDXJ hits 42, 35, I think that would be the most you could see in a correction. Again, looking at the chart here, 37 was resistance, 37 becomes support. So that's what I would look at. Again, if GDXJ hits 42, you want to look at 37 as support, maybe 36. Those are going to be the strong support levels. That's all for this video. I don't want to say a lot more than I have to, which I usually do anyway. Thank you so much for tuning in. Let me know what you think of the first chart especially, and I'll talk to you guys again in the next video.